Welcome to BizFlow Tutorials video series on accounting integration for health and wellness providers. In this video, we will explore key accounting concepts within BizFlow, focusing on cost of goods sold, accounting for discounts, sales tax management, accounts receivables. Let's go step by step through these topics. Cost of goods sold. COGS applies to the products you sell. Each sale requires recording the cost of goods balanced by the inventory account. Accounting for a product sale. Navigate to Payments Invoices to review the accounting entries for a product sale. If the product sells for $169.74 and its cost is $60.12, COGS is debited $60.12. Inventory asset is credited $60.12. When an item is sold, inventory decreases, credited. COGS increases, debited. Revenue from the sale is recorded with sales revenue credited, cash or accounts receivable debited. Sales tax payable is credited based on the applicable rate. To review accounts, go to Setup Manage Chart of Accounts. Under Products, all sales are categorized under Merchandise Sales, with a single COGS bucket. For categorized tracking, you can create separate accounting buckets for each product type. However, BizFlow's reporting system allows detailed sales breakdowns without requiring category-level accounting segmentation. Accounting for discounts. Discounts are applied directly to the sales revenue line rather than as a separate account. Applying a discount in BizFlow. Let's go to the point of sale and create a transaction. Add a discount via Add Exception. The discount is debited against the sales revenue account. Merchandise sales are credited, discount debited. The net revenue reflects the adjusted amount. BizFlow automatically adjusts the discount within the sales account, eliminating the need for a separate accounting bucket. Sales tax management. Sales tax varies depending on whether you use cash basis or accrual basis accounting. Setting up sales tax accounts. Go to Setup, Manage Chart of Accounts. Under Miscellaneous Payments, locate the sales tax payable account. Ensure the correct Department of Revenue is set up as a vendor in QuickBooks. Cash basis accounting. Revenue is recognized only when payment is received. Sales tax is immediately payable to the government upon receiving funds. Monthly, quarterly tax payments are based on collected amounts. Accrual basis accounting. Revenue is recognized when an invoice is issued, even if payment is pending. Sales tax is recorded as payable upon invoicing. If an invoice remains unpaid, the business is still liable for the sales tax. In case of bad debt or write-off, previously paid sales tax must be adjusted in the next tax cycle. Refunds and returns. Sales tax adjustments apply for both cash and accrual basis accounting. If a customer returns an item after tax has been paid, adjustments must be made in the next tax payment cycle. BizFlow follows standard accounting principles designed by chartered accountants. Accounts receivable in BizFlow. Now, we will discuss the accounts receivable bucket. Typically, in cash basis accounting, revenue is recognized only when payment is received, meaning there is no AR bucket. However, in accrual basis accounting, revenue is recorded when earned, even if the payment has not yet been received. In certain cases, cash basis businesses may still need an AR bucket. This often applies to large corporate or commercial accounts where businesses allow deferred payments or establish net payment terms. In such scenarios, invoices are generated and sent to customers even though the actual revenue is not yet recognized in the general ledger (GL) until payment is received. Enabling accounts receivable in BizFlow. BizFlow provides an option to manage AR in a hybrid cash basis model. To enable this feature, follow these steps. Navigate to Configuration Policies. Open the Accounting Basis tab. Although the system is set to cash basis, You can enable AR by checking the option, Allow AR for cash basis accounting. For accrual basis accounting, this setting is unnecessary as AR is assumed to be in place by default. Map accounts receivable in the chart of accounts. Go to Setup, Manage Chart of Accounts. Under Miscellaneous Payments, locate Accounts Receivable and ensure it is correctly mapped to the AR account on the accounting side. Leave the vendor and customer fields blank, as there is only one AR bucket for all transactions. Once these steps are completed, AR management for cash basis accounting is enabled, and BizFlow will integrate this information with QuickBooks. Understanding the transactions. Let's review how transactions are processed with AR enabled. Invoice creation. When an invoice is generated under Pay Later, the sales account is credited, but since no payment has been received, no cash is debited. Instead, accounts receivable is debited, increasing the AR balance. Payment receipt. When the payment is eventually received, AR is credited, reducing the outstanding balance. Simultaneously, cash is debited, reflecting an increase in available funds. This concludes the accounts receivable section for cash basis accounting. The process is similar for accrual basis accounting, where AR is debited when a sale occurs without immediate payment. AR is credited when payment is received with the corresponding payment method, cash, check, or credit card debited. If you have any questions or need further assistance, please reach out to our support team. Thank you for watching.